it is the strongest and most conductive material ever discovered. It is really the most powerful material that we've ever found. So you can put graphene in almost any material really known to man, whether you mentioned a few: concrete, carbon fiber, you name it. It works well with other carbon materials and it works well with other graphenes. So truly an unlimited market potential here, because there are just an unlimited amount of use cases.
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you here for a really interesting conversation that we're going to have. It's on a material known as graphene, which I feel like I'm a little bit behind the curve. I sort of heard the word graphene out there, but I didn't really know exactly what it was or what it could be used for. And I will say, I'll introduce her in just a moment, but I'll say I've rarely had the sort of immediate demand that I started receiving around the turn of this year from listeners here who really wanted to see an interview done on graphene and its potential uses. But specifically, the name of this particular company and particular executive kept coming up. And basically, as I always like to tell you guys, you ask, I listen. So based on popular demand, we're going to cover this topic. Now, for those who, like me, did not know what graphene is, it's a two-dimensional variety of the element carbon, right? C on the periodic table. It's what's known as a carbon allotrope, and that means basically it consists of a single layer of carbon atoms tightly bound in like a hexagonal honeycomb lattice, and it's known for its exceptionally high tensile strength, something like 200 times the strength of steel. It's an excellent electrical conductor. It's transparent when you look at it, and being the thinnest two-dimensional material in the world. On a microscopic scale, graphene is actually the strongest material ever mentioned. So this thing has a ton of potential commercial uses. It can be used to enhance batteries and have them charge faster, create durable anti-corrosion coatings, flexible electronics, higher efficiency solar panels, advanced biomedical applications like drug delivery. It acts as a super material additive in composites, strengthening everything from, they say, tennis rackets to car tires. So to learn more about this potentially wonder material and how it might transform the world of, well, the world that we live in going forward, we're very fortunate to be here with Kjirstin Breure, and I really hope I pronounced your last name correctly there, Kjirstin. She is president, co-founder, and chief executive officer of Hydrograph Clean Power. And if the market reaction is any indicator of the true potential for this company, its stock is up 1,900% in the past 12 months. Just 164% in the year so far here in 2026, and 90% in the past month. Those are pretty stunning numbers there. So anyways, Kjirstin, it's a real pleasure to meet you. Welcome to Thoughtful Money.
Thank you so much for having me.
All right, well, thanks so much for joining us today. Okay, so I did my best job there to give just a really concise, starting off point for graphene. First off, how did I do? Did I get relatively close to what this thing is and what it does?
No, that was great. So as you mentioned, it is the strongest and most conductive material ever discovered. And it was actually
most conductive as well.
As well.
Wow, okay.
This is all depending on the materials you're using it with, how it's processed, the quality of the graphene. So there are a lot of variables there, but it is really the most powerful material that we've ever found. And as you mentioned as well, it's usually an additive. So anything that's two-dimensional, you're really adding into a 3D counterpart. Not to overcomplicate it, but really graphene is it is kind of a disruptive technology, but we don't compete with other materials. You can put graphene in almost any material really known to man, whether you mentioned a few: concrete, carbon fiber, you name it. It works well with other carbon materials and it works well with other graphenes. So truly an unlimited market potential here, because there are just an unlimited amount of use cases. And as it's brand new, we're still kind of figuring out how to use it. It was discovered in 2004 at the University of Manchester with the infamous Scotch tape method, where researchers quite literally put a piece of Scotch tape on graphite, eventually isolating one atomic layer. So because that was part of the discovery, we thought that this material existed likely from the 50s. It was eventually confirmed. They won the Nobel Prize. And since then, customers or companies have been kind of racing to produce high quality graphene. Most companies are starting with graphite as a feedstock, and they're either mechanically or chemically exfoliating it to try to get down to that one atomic layer. Hydrograph is very different. We are a synthetic production company, so we detonate hydrocarbon gases exactly as it sounds. We explode acetylene, which is our favorite hydrocarbon, though all are covered in our patent. Acetylene and oxygen. We basically pump these gases into a steel chamber. Our reactor is kind of like an engine where we have four 70-liter chambers, very thick carbon steel, and then we have electrodes inside that fire. It destabilizes the acetylene molecules. You would know acetylene as a welding gas, most common use. So it's very volatile. You can imagine it's bringing a lot of energy with it. So we need very, very little energy to initiate that reaction. We create an explosion. And if you could imagine a puff of smoke being generated in that chamber, that's effectively our product. So that puff of smoke settles, and it's a very, very black, fluffy powder that we then package and sell to our customers. So simple in theory, and it's great because, like I mentioned, no energy to initiate the reaction, and our only byproduct is syngas or synthesis gas, and that is a commodity material. So no waste and very, very low energy usage and extremely scalable.
I mean, we're going to get into this, but I mean, this just sounds almost too good to be true.
Yeah,
When you say really no energy required or very little energy required, does that also mean like very low cost to produce?
it is very low cost to produce. I do. There are some companies that have graphite as a feedstock that they might be more cost effective on a tonnage basis. But once you're using the graphene, so we in the industry would say the loading level. So you're usually using 1% or less. For us, a lot of the applications we work on, we're using 0.01% or even lower. So once you factor in the amount of graphene that's being used, we are the most cost effective material in the industry, even though we are, despite having a very low capex, we are on the higher end of the market. And that is just because of the performance that we provide. And we're at roughly 80% margin. Like I mentioned, very scalable. We can build these reactors in a matter of months. And the capex is very, very low for the industry.
Okay. All right. So the again, I'm very new to this space, but the thing that I've sort of I think I've learned is the real pursuit here is high quality
Mhm.
graphene. Um, and if I understood the differential between sort of your company versus everybody else is most everybody else is starting with graphite or whatever, and they're trying to reduce it down to that single layer thick
Mhm.
state where you're kind of lab growing the single level state itself. You're kind of organically creating it, right? Am I more or less correct here?
Correct. We basically convert the carbon in a gas into a solid form in that explosion. And so most of the companies, to not be too critical of the industry, they're selling what's closer to graphite powder just because it's so extremely difficult to get those carbon layers to separate. Carbon really wants to stick together. So it's incredibly challenging to really get high quality graphene derived from graphite. I think most of these synthetic producers are likely at the higher end in terms of performance. And it's really not only about carbon content. A lot of graphene producers talk about carbon content, but we know that, diamonds are pure carbon, graphite is pure carbon. Those don't have nanomaterial traits. So different carbon allotropes, you really need it to be a nanomaterial, meaning it's sp2 bonding. And I know that sounds very technical, but that's
Hmm.
really, a lot of companies don't list that on their data sheets, or worse, when there's third-party testing to verify the quality of the graphene, a lot of the graphene being sold does not match what the companies are claiming that they actually produce. So I think there's going to be a lot of consolidation in the industry, but really with the reputation that we've created working with very large companies and more recently the US military, we are very confident in our ability to produce and scale to what we believe is the highest quality product in the market.
Okay. And highest quality product, we're there again, which I assume is just the best single layer sheet of carbon atoms arranged in the
Mhm.
graphene way. Um, what happens with lower quality? We'll even start from here because you mentioned the word powder. Like when you create this, as I understand it, very imperfectly, it's a
Mhm.
layer, right? So it's I almost imagine like, a sheet of a two-dimensional sheet like this that's just all carbon atoms, all the way around. How do you actually work with it? Like, do you work with sheets? Do you grind it into a powder? Like, what form factor do you use graphene in?
I'm going to try not to go too technical here, but our graphene is not strictly single layer. So we're between 2 and 7 layers, but it's called turbostratic graphene, which means the force of the explosion really creates a space in between those layers, which
Mhm.
is really what you want because when you're using the graphene, you want those sheets to separate. So we have not only more nanoscale graphene, but again, we're, I believe, the only fully sp2 bonded graphene, meaning we're the most nanomaterial like graphene in the industry. But our lateral particle size is 20 to 50 nanometers, so incredibly small. Most graphene in the industry is in the micron scale, so about 1,000 times larger. And what that means is to talk about quality, if you can kind of imagine these little sheets of graphene kind of looking like the honeycomb lattice. What you want, and this is kind of the definition of sp2 bonding, the two carbon atoms connected is really what happens is you have that additional electron on the top and it's kind of shooting across this lattice. I'm trying to explain this in the simplest way.
That's all right.
So these separate and they basically create more nucleation sites. So they start the crystallization process to give polymer chemistry as an example, very evenly throughout a material. A lot of other companies, if you could kind of zoom into their graphene dimensions and size, they might have holes in the lattice, there might be impurities on the lattice, and all of that disrupts graphene's strength and conductivity. So
That's where I was going. Okay.
there are many, I guess, layers to what would constitute high quality graphene. And we are very, very lucky that our patent really allows that in one step with no additional effort. So exactly what we produce in that chamber is exactly what we sell.
Okay. But quality matters basically because if you value the attributes of graphene, like strength or conductivity, the lower quality, the less strong and less conductive it is. And you're nodding as I'm saying this. Okay. And again, I'm just trying to help the average person get their brain around this. If I were to buy some graphene from you,
Mhm.
what does that look like? Does it look like a brick? Does it look like sheets of paper? Does it look like ground powder? What form factor does it usually come in?
Very, very fluffy black powder. So very light, high volume material. You can put it into kind of a solid form for shipping, but mostly we're selling just the powder as is, or we might create a dispersion with it or sell it in a paste just because it's easier for the customer to use.
Okay. And I don't want to get too complicated on this, but again, just to help people understand this. So let's take a use case or two of somebody that wants to use graphene to make something either more
Mhm.
conductive or stronger.
Mhm.
Um, what do you do with the graphene? Just mix it into your concrete if you're making concrete? Do you melt it down along with whatever conductive metal you're going to use to create, electrical wiring or whatever? Like how does it get, how do you take graphene and then make something better with it?
Every material is going to have a slightly different process. So with thermoplastics, we often make a master batch. That's a highly loaded batch of plastic that then we can melt down and work with other plastics with. So for example, with concrete, it is almost as simple as just mixing in, though there is, of course, a process behind each one of these examples. And a
Mhm.
lot of what we do, we're working with the Army on ballistic protection materials. We're working with different plastics companies, for example, to produce nylon fibers, really all areas, but every material is going to have a slightly different process associated with it.
Okay. Um, the way you described it, it has all these great benefits, but it's also sounds like pretty darn cheap to produce.
Mhm.
So is it like this wonderful transformer for existing products and processes where like I can get graphene and add it to it to make it better. I can make my concrete stronger. I can make my metals more conductive, whatever. Um, and it doesn't really cost me that much to do so because graphene is just so darn cheap.
Exactly. So you can kind of think of it that we make things lighter, faster, stronger, and it's more of an enabling technology.
Okay, almost like a, it's probably a terrible analogy, but like the old Intel Inside, our microprocessors are so great. You put our chip in, your computer's going to do a lot better. It's like a
Mm,
graphene inside product, where if it's got graphene in it, it's going to be stronger, faster, better, whatever.
exactly.
Okay, all right. Um, you mentioned that it's 200 times stronger than steel. From a conductivity standpoint, I think, and I could be wrong on this, but I think before I heard of graphene that I was told that silver was the most conductive element. How much more conductive is graphene than silver?
There's a bit of nuance to this. And so for us, this is a newer area that I would say, would like to see more data sets in. So it's really depending on how the graphene is used. But at least theoretically, if you have a large sheet of graphene, and it is because the difficulty with metals is graphene's melting point is lower than what would combine within a lot of metals.
Okay.
But you could use sintering. There are a number of ways that we can improve metals, but we have a number of ongoing studies, and we should be able to release the data from those studies soon.
Okay. Gut feel, I mean, like, are we talking 10% more conductive, 20% more conductive, or like some sort of multiple, just the way that it's so much stronger than steel?
I think as we improve in our understanding of graphene and the processing of graphene, I think we'll see multiples.
Okay. All right. Um, so I listed, sort of a summary that I got from the internet of applications of graphene, but obviously you're running a company and help co-found this company to address the market opportunity here. What do you see as the biggest, you know, societal gains and just biggest commercial opportunities for companies like yours with graphene?
It's a hard question because there's really so much variety there. I would say a
Mhm.
lot of the interest that we have incoming is defense related. I think big picture, it's going to be more in energy. I think that the gains that we can see with graphene can create radically different, not only chips, but batteries, lubricants. And when you improve, the energy of different systems, really everything functions so much better.
Mhm.
Apart from that, we're going to have taller, stronger buildings, more powerful vehicles. Really the future is kind of unlimited. Early days, a lot of people gave some silly examples about space elevators, and I'm sure that is coming, but it's decades away, I would say.
Okay. I think that's actually maybe the first time I did hear of graphene was a graphene related space elevator. Um, I also heard too, I think I mentioned it in the intro, that there may be some really interesting health applications of this, especially in things like drug delivery. How does graphene do that?
Yes, so we don't work on that specifically, but there is proof that you can put graphene in different vaccines, and it kind of is a delivery mechanism, so the drug can get to the right part of the body, which I think is very, very interesting. And we're going to have nanoscale robotics with graphene, all sorts of applications. We do work with a company called Hawkeye Bio, and they produce a lung cancer biosensor that can detect lung cancer, I believe, 6 months sooner than any other test on the market, and they'll be rolling out additional biosensors for all types of cancer that really should kind of democratize that process and allow access to many more people that could otherwise not probably afford it.
Okay. So you said graphene was, I think, sort of officially, we'll say, proven in the lab in 2004. I think you said it was maybe theorized since
Mhm.
the 50s.
Mhm.
And again, from the reading I did, it sounds like it is naturally occurring, but sort of in small amounts. And I guess we just hadn't actually observed it until 2004. First off, just want to be clear, you said it was discovered using the Scotch tape method. I
Right.
mean, like literally, and you tell me, but I mean, literally, they put like Scotch tape. I don't know whether it was on graphite or not, but just ripped it off, and we're like, oh, we think we just got a layer of this, and that's graphene. Is that pretty much how it was proven?
More or less, I don't know how many times they had to do that over and over, probably sticking tape together to try to isolate that one atomic layer, but they did eventually prove it quite literally with Scotch tape.
Wow, that's crazy. Okay, so it's we've confirmed it existed. What? That's a little over 20 years ago,
Mhm.
and maybe people have been reading about it for a couple of years. Um, but it's something that you know, right now it's just kind of theoretical, right? I mean, I haven't seen at least anything that says, new and improved with graphene. Um, to the person who's listening to this conversation, Kjirstin, saying, I mean, this just sounds way too good to be true. I mean, this thing just seems to do everything and it's, you know, super low cost to produce and stuff. What would you say to them? How would you actually say, look, trust me, this is actually, it's really real and it's really going to make your life better?
I mean, I think lots of new technologies can come across like that. If we could imagine having what we have now decades ago, it would have seemed impossible as well. I think, graphene really is on the bleeding edge. And I think that most of what we're going to uncover, we can't exactly fathom now. We're really just starting to learn how to use it, but there are products that already have graphene. I do think that it is in industry more than what people realize. And I think that, they say within the industry, it's really the next 2 years that this is going to fully take off. And
Okay,
we've
and that
already
was
done
my
it.
next question for you. Is like when will we kind of see the benefits of this, whether we even know it's graphene or not, but we're just like, oh my God, I'm making
Mhm.
this up. Like my car's tires just got so much, I'm never having to replace my tires anymore. They're so much, stronger than the old version. Or like, when will we actually know we're living in a graphene era?
I mean, I think it's going to begin in the next 2 years. I would say by 2030, we're going to have a solid amount of products that people will have heard of graphene. It will be in a lot of different materials. And I think that's when it's going to be very exciting.
Okay. So I mentioned earlier the stock performance of your company and folks, this is not an official endorsement and past performance is no guarantee of future performance and all that stuff. Um, but clearly, the market has woken up to the potential here. Um, I guess first question is why do you think that the stock performance has been so dramatic in the past year? Is it literally just an appreciation by Wall Street that graphene is important and they're pouring into all sorts of companies, or is there something specific that happened with Hydrograph? What's driving this latest interest?
I do think it's quite specific to Hydrograph, and I really believe it is, the beauty of the patents that we have. It's an incredibly simple method. It's scalable. We have global coverage, and we have provably the best performance by a long shot in the industry. And I think that we probably hadn't socialized the company enough in previous years, and now that we've taken that more seriously and are, attending conferences, things exactly like what you and I are doing
Coming
right
on
now.
podcasts like
It
this,
all
yeah.
it all really helps, and I think we've picked up a lot of very very supportive shareholders over the past year, and all of that has really helped create something that I think we deserve the attention. I think that this company really is going to change a lot. And to speak a little bit more about some of the recent attention, we've been working with the Army and the Navy for about 2 years, and the Army has expressed interest in building an innovation hub in Austin. And to our knowledge, we're the only graphene company that's really made the cut. So they've been very selective. We believe it will be called the Graphene Innovation Consortia. And I believe that we will be there with other defense companies, other battery producers potentially. So as we receive more information from the military, we will, of course, update the market, but all very, very good signs for us.
Okay. And I mean, it sounds like you're projecting this is going to be like a lot of transformative technological transitions where they generally started in the military, whether it's the internet or wireless communications or, I don't know, all the research that went into now sending rockets to the moon and all that stuff. So seems like it's just another transformation in that similar chain, correct?
Exactly.
Yeah. Okay. Um, so let's see here. Uh, there are, there's, there's, I'm just trying to think of the ways in which we will experience this in the world. And I know to a certain extent, it's a little bit like, well, we're still figuring out what this wonder thing can do. And there's probably lots of applications or solutions we can't even imagine just yet. But, we live just taking America for a moment, we live in a country that has an aging infrastructure, right? So we have all sorts of roads and bridges, uh, whatnot, that are dams that are going to need to be rebuilt going forward. Presumably, if they are, if they're rebuilt or renovated with graphene related technology, um, we may get a much longer shelf life out of the next generation of things that we're building. I know we want to, dramatically increase our electricity production as a country. Um, and we want to electrify, the transportation grid if possible, and all sorts of things. I mean, I can just sort of see all these things that graphene, if it does what you're purporting it could do, um, we're gonna see this as something that will sort of both accelerate the rollout of all this, but also give us better of everything, right? Like it'll perform better, but it'll last better. If somebody has an electric car, um, new batteries that are made, one of the concerns about owning an electric car is, well, when the battery, gets used up, um, I gotta, if I want to go to replace the battery, it might cost as much as just buying a new car. That's today's issue. I'm assuming graphene might be able to extend the battery life, of a car battery by years, decades, et cetera, whatever, all of a sudden making that kind of a non-issue. I mean, I'm thinking through all this in real time, but like, am I somewhat accurately describing what you think graphene is bringing to the future for us, both as individual consumers, but also, a nation at large?
No, absolutely. And I think it's time and money, right? A lot of the really high tech, a lot of the very exciting new applications with graphene will take more time to really work out the process and the research behind it. But we are already on our way there. And I think there's going to be significant improvements, even with, automobile batteries really in the near future.
Okay. And even with the automobile, I mean, again, uh, yeah, the tires are going to be better, as we said earlier, but the battery might be better if it's an electrical or if it's a hybrid. But presumably, might the chassis be lighter but also stronger if graphene can be included into the manufacturing process for the actual, paneling and uh, you know, metals that we're putting into the car?
Absolutely possible.
Yeah, I mean, again, like I said, I'm just sort of thinking through this in real time, but like, you can make airplanes, right? Well, make them lighter but stronger, and all of a sudden they're a lot more fuel efficient, right?
Mhm.
Sending things up into space. Again, thinking big here, you build a rocket out of something that's got a lot of graphene in it. Well, all of a sudden you can get a much bigger payload into space for the same amount of fuel.
Mhm. Completely.
Okay. All right. So I'm not being crazy here with my brain leaping to all this.
Some of these will take more research, but it is absolutely possible.
Okay. All right. Well, you kind of, really expanded my thinking here, and it's super exciting and super interesting. And I'm really hopeful that your company and all the graphene other companies out there, help accelerate us to this new, really cool future. I guess first on just the technology itself or its applications, is there anything else that's worth putting on, the average viewer's radar screen right now about it that I just haven't thought to ask you?
In terms of our technology.
In terms of your technology, just the applications of graphene or things to know about it.
Um, I think we've covered most, I guess, just kind of as an update on where we are. I mentioned the Graphene Innovation Consortia should be built in 2027. We're opening a headquarters here in Austin in about 2 weeks, and then a large scale production facility just outside of Houston. So we will, as mentioned, a lot of our interest is in defense right now, but we work a lot with composites coatings, and we will be rapidly expanding the applications that we're pursuing. I think I mentioned that we're going to be looking much more into metals. We will be looking at, additional biosensors. And so it's kind of challenging in a company like this because you can do everything, but
Right.
that means that you need to be much more selective really when you're getting started. But as soon as we see revenue, we'll be able to fund so many more projects that are going to be much more highly engineered.
All right. Well, for folks that would like to learn more about Hydrograph and invest in it, tell them where to go and obviously tell them what the ticker for your company is.
Of course. So we are hydrograph.com. We are on the CSE. Our ticker is HG. But close to May, we will be uplisting to NASDAQ. So we will also be releasing more information on that change.
All right, great. And Kjirstin, when I edit this, I'll put the URL and the ticker up on the screen so folks know exactly where to go. Well, Kjirstin, this has been super fascinating. I very much appreciate everybody who put both graphene and your company and you on my radar. And let's just say you've got an open invitation here to when there's any potential really big, meaningful milestones in terms of what's happening with graphene, or what's happening with your company, come back on the channel here and we'll have another one of these conversations.
Sure, would love to. Thank
All
you.
right. No, thank you very much. Everybody else, thanks so much for watching.
In 2025, Arcadia Economics' Chris Marcus notes the silver market faces structural shifts amid rising deficits. Silver has surged 88% since early 2024, climbing above $40 for only the third time in history, according to a report by Arcadia Economics. Industrial demand reached a record 680.5 million ounces in 2024, while retail selling and supply constraints highlight growing imbalances. Institutional flows, new technologies such as Samsung's silver heavy batteries, and fresh central bank interest in Russia, coming from Russia, Saudi Arabia, and the US. I wouldn't say that we're central bank buying yet, but central authorities are buying silver now. We're going to be hoarding silver now. They all suggest silver's strategic role is expanding rapidly.
As deficits widen, significant structural shifts in the silver market have been noted. Silver has risen 88% since the beginning of 2024 and is now above $40 for just the third time. In 2024, industrial utilization reached a record 680.5 million ounces, propelled by innovations such as Samsung's silver-rich batteries. Although there are obvious mismatches in retail sales and supply, institutional inflows and escalating interest from Russian, Saudi, and American authorities indicate that silver's strategic significance is rapidly increasing. Vince Lancy, a veteran trader, metals analyst, and founder of Echo Bay Partners, highlights an extensive analysis of silver's prospects for 2025 published by Chris Marcus of Arcadia Economics, highlighting the metal's significance for years to come. Samsung's silver-heavy batteries are a major emphasis. The estimated demand for silver is so high that a logarithmic chart is needed to explain it. Marcus's enthusiasm and thorough analysis are evident in the report, which is a great tool for anyone interested in silver. The focus is now on Trump's new Executive Order 232, which raises concerns about the future of policy because it noticeably ignored silver despite previous references. Powell has essentially deprioritized rigorous inflation targeting, so rate cuts are more dependent on job losses than inflation, even though upcoming data like the CPI and PPI may influence markets. As we begin the video, don't forget to hit the bell button and subscribe so you don't miss any updates. Please leave a comment below and give us a thumbs up if you found the article interesting. We appreciate your feedback.
Silver's future looks very bright, as well as the unlock post, which is linked in there for Chris Marcus's Arcadia Economics. So, personal professional comment now. Chris Marcus published a mammoth, ambitious report this weekend on silver's outlook for the rest of 2025. While the report covers that time frame, makes it like a timepiece, its implications extend far beyond that, making this a must-read for anyone who wants to understand the likely path of silver ahead. One section worth highlighting is on the Samsung batteries. Now, we had read this and we know about this, but we had never looked at the side-by-side how much silver was used, how much silver could be used. We even tried to create a graphic for it, but couldn't make it fit. That's how earth-shatteringly large silver's role would be in these new batteries. We put the graphic in. The first graphic was, this is how much silver is used versus this is how much silver will be used. And it was ridiculous. So I had to make a log normal chart. And even then, it's ridiculous. Anyway, Chris was kind enough in the credits to thank me for my contributions. And I'm glad to have played even a small role in what is clearly a labor of love. If you know Chris, you know his passion for silver, combine that passion with detailed industrial analysis, and the result is pretty impressive. The full report is included in the post, and we would recommend you visit Arcadia to take a look at that as well. Moving on. Related post, HeartNet, we mentioned that. Sunday CFTC analysis, that was a really good one. It was a fun one for me too. I got 2 hours of that recorded and very lively interaction as well as some good questions. And plus the guys got me to talk more about my childhood trading. Mini pod, macro discretionary, Goldman, gold price near 5,000 and Fed damage. It's starting to look more realistic to me than it sounds. Coming soon. Coming soon tomorrow, probably, we're going to have a breakdown and analysis of Trump's executive order 232 signed this weekend. We have a couple calls into people that we're trying to get some more information back on. We understand the implications for gold. People have been talking about it. We actually have some analysis from a Goldman trading desk, institutional stuff, that'll break down the gold for us. We're going to look at that a little bit closer today. And what we're focusing on now is getting data on what was not said about silver. Silver was not mentioned. And you could say, oh, well, this is, who cares, right? No, silver was mentioned when 232 was first discussed, but it wasn't mentioned in the signing of the executive order. So what does that tell you? I don't know. We're going to find out. Data on deck, CPI and PPI. Now, those are important numbers. They're always important numbers, and they're going to move the market. But I'm telling you, they're not important unless they're incredibly high for Powell's decision to cut. Okay? The decision to cut is based on the economics. Are we firing people or not? Not the inflation. He has already raised the inflation target by abandoning the FAIT. He has basically said, I can't focus on inflation anymore. He blamed it on the FAIT, tied it to the goat, released it into the desert. The scapegoat is out there. It's done.
Vince Lancy clarifies that unless inflation is exceptionally high, Powell's rate cut plans are unaffected by short-term movements in gold based on CPI or PPI data. Intraday charts and stringent risk management, setting tight stops, taking partial profits, and letting the remainder run if momentum holds, are their main tools for trading. At the moment, silver provides little clarity but may be creating a bull flag, while gold appears bullish above critical levels. Instead of chasing moves, the emphasis is on risk management and discipline. Let's dive into the interview.
Because look, if you see gold drop $100 on CPI or PPI, check in. Why? It's not going to change his plans unless it's ridiculously high. All right, let's move to the markets. As I said, you don't want to buy gold now because of this symbol. If you're buying gold, you're buying it for a completely different reason. Okay? And I'll tell you what the reason is for me. The reason is I'll take this analysis, this system that I use, and I'll break it into an hourly chart. And I'll say my bias is bullish because of this chart. And then I'll put it into an hourly chart and I'll look for an entry point that tells me acceleration is due. That's the weekly in gold, the weekly in silver. Weekly in silver's marching along. The daily in silver really was the cue there. Let me go to a couple other systems. Okay, so I'm doing my intraday analysis right now, right here for you. There's an algo buying the market. It's not safe to buy it below 36.13 for the next 2 hours. So I'm long. I'm not buying it right now, but I'm long right here, and I'll sell it on a stop loss below 36.13. And how much am I risking? $5. I'll sell it at 36.28. That's it. Risk 5 to make 10. Go with the flow. Stop yourself out and move on. Now, if the market gets down here and breaks this, I back off. I reset. As long as it's above these lines, that's poly market, by the way. Poly trends, not poly market. Poly market's the gambling site. I think these lines are pretty important for the day. And even if they weren't here, I'll take it out so you can see it a little bit more visually. This is a line going across. This is a typical line that I would draw. I was like, all right, this is where it paused. This is where it got rejected. This is where it broke through. As long as it holds in this area here, 35.98 area, then I would look for another reason to get long. If it breaks 35.98, I start looking for reasons to get short. Intraday, okay? So if this never breaks, so I just bought it right here, right? In our hypothetical, I bought it right here. and I don't get stopped at and it goes to 35.28. Should I take my profit to 36.20, 36.28? Well, yes, I risked one to make two, right? No, I'm not going to do that today because I'm already very bias bullish. I'll sell half. I'll let the half run for the rest of the day, for the rest of the week, for the rest of the month if I have to. And that's the idea. You get a good entry, you put a tight stop in, and you trail your stop higher. That's the way to look at it. Let's see what silver offers. It's not rocket science. It's just being disciplined with your risk. Silver offers me no insight right now. No insight, at least on these things that I look at. Let's see what Poly has. I'm doing this for the chat, guys. I know you guys are very looking at this very much. All right, so Poly gives us a level to not be bullish above for the rest of the day. 41.18, which is pretty close. So no Bollinger Band analysis here. You ready? You buy it here with 41.18 as your stop. If it goes below 41.18, you're neutral. If it goes below 40.91, you're bearish. The rest of the day, intraday stuff. This doesn't affect my silver physical. Doesn't affect anything. I'm just trading. How's the movie go? It's just money, right? And silver's not just money. Silver daily, that's great. All right, so this is shaping up like I can't believe I'm saying this. This is shaping up like a bull flag.
Silver's role as a strategic asset is rapidly expanding, supported by record industrial demand, new technologies, and growing institutional interest, even as policy signals remain uncertain. Gold continues to show strength, while silver may be setting up for its next move. For investors, the key lies not in chasing short-term swings but in understanding the bigger structural shifts and managing risk with discipline. How might Trump's Executive Order 232 affect silver's future role if it continues to be excluded from policy discussions? Could Samsung's silver-heavy battery technology accelerate silver shortages faster than markets expect? We would love to hear your opinions, so please leave a comment below. Please remember to subscribe for more material, and give this video a thumbs up if you found it helpful. We appreciate you joining us on this adventure.
First of all, there's no certainty that the Fed will choose a figure of 15,000. They might just choose, if they do it at all, the spot price. And in fact, there's a small indication that that might be under consideration because of the publication by the Federal Reserve on the 1st of August about gold revaluation and how other countries have accounted for it. And in that particular paper, they discussed revaluing gold to 3,300, which was the price on the day they did it. So first of all, 15,000 is not written in stone, but the real point is the higher they revalue gold to, the higher the level they value it at, the more profit they can make, the more money which can be printed without increasing the level of government debt, because when they revalue gold, effectively the net result is the Federal Reserve will end up with this thing called gold certificates.
With public debt at high levels, some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. Colin Weiss wrote in Official Reserve Revaluations, The International Experience on August 1st. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the US and Belgium recently. For the US, this would involve revaluing the government's 261.5 million troy ounces in gold reserves, the largest gold reserves globally, from a statutory price of $42.22 per troy ounce to current market prices, which stand around $3,300 per troy ounce. Noting this scenario, the speaker, Clive Thompson, highlights that the Fed isn't guaranteed to pick a revaluation target of $15,000 per ounce. They might even use the spot price instead. The Federal Reserve published a research note titled Official Reserve Revaluations, The International Experience. The paper examines 5 countries, Germany, Italy, Lebanon, Curacao, Sint Maarten, and South Africa, that have revalued gold or foreign reserves to bolster their finances. The Fed has not committed to a specific revaluation figure, such as $15,000, using market prices, is still on the table. The study examines how other central banks have utilized revaluation proceeds to offset operational losses or provide government financing. However, the US has yet to take such a step. If revaluation occurs, then this paper profit could be converted into gold certificates and handed over to the Fed. The Fed could then credit the Treasury with new dollars, allowing the government to spend without officially increasing its debt. This is why some refer to it as a hidden financing tool for the state. Central banks have different methods for valuing their existing bullion holdings. Some value their gold reserves at their historic cost. Others report it at current market prices, he said. When central banks report their holdings at current market prices, fair value, the unrealized profits or losses from valuation changes are recorded. When gold is valued at historic cost or modified historic cost, gold reserves can be revalued at market prices or values closer to market prices to generate revenues, he noted. When all official reserves are valued at market prices, the unrealized valuation changes recorded in the revaluation account can be shifted to others. Now, we present the clips from the interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you and enjoy the video.
First of all, there's no certainty that the Fed will choose a figure of 15,000. They might just choose, if they do it at all, the spot price. And in fact, there's a small indication that that might be under consideration because of the publication by the Federal Reserve on the 1st of August about gold revaluation and how other countries have accounted for it. And in that particular paper, they discussed revaluing gold to 3,300, which was the price on the day they did it. So first of all, 15,000 is not written in stone, but the real point is the higher they revalue gold to, the higher the level they value it at, the more profit they can make, the more money which can be printed without increasing the level of government debt, because when they revalue gold, effectively the net result is the Federal Reserve will end up with this thing called gold certificates, which is not part of the USA debt, doesn't have any interest, and has no maturity date. So what they're basically doing, if they do a revaluation at any level, they are swapping the debt that they have at the moment, or some of it, for gold certificates, which is not debt according to the official the Treasury balance sheet. Now, as I said, the higher the price they do it, the better it is. So I picked a figure out of the air of 15,000. I kind of felt my figure was on the low level compared with some other people who've been picking 20,000. But of course, the level at which they'll do it, if they do it at all, would be at what level do they dare to do it without disrupting the market? Because we don't want to, well, they don't want to do a figure which is going to make people panic and say, oh my God, the dollar's worthless because they've done this. So I kind of chose that number based on what I thought would be a right number relative to the amount of money they've been printing in the past. As you know, they're printing roughly $2 trillion a year effectively in new debt to pay for the budget deficit. So the figure I picked of $15,000 would cause a new printing of 3.9 trillion as opposed to the 2 trillion a year which is being created. So that would be very, very slightly inflationary, not much. I mean, let's face it, with the amount of money which has been coming into existence over the years, it's not a big deal. For example, it's only about 10% of the national debt. Well, I think if you're buying physical gold and silver in the form of coins and bars, the thought process ought to be one of, I'll keep it forever unless there's no choice. So it's kind of like an heirloom. It's a bit like if you buy a painting, you put it on your wall and you expect to pass it down the generations. Obviously, it's an asset which can fly a little bit under the radar screen, which can be advantageous depending on how you look at it as well. So when I buy physical metals, I tend to think that I'm not buying them with a plan to sell tomorrow or next week or next year or 5 years or 10 years or at any price. It's kind of like the parachute you've got just in case the worst comes to the worst and you've got no choice. But if you want to trade in and out of gold and silver, then the way to do it is the way, I know you don't like it, Mario, but the way to do it is through ETFs or gold mining shares or things on the stock market where you can trade with a very narrow spread and at high speed. But that's a completely different kettle of fish from having a parachute. Trading is where you buy something with a plan to sell it quickly and make a profit. Whereas I think the reason why a lot of people are choosing to buy gold these days is because they fear that the financial system that we are in is getting close to the end. I fear the trust in fiat money could evaporate very quickly, and then they might be forced into a new system. And if you own a gold coin before we cross that line, you'll still own it afterwards. Whereas if you've got something in custody, subject to the whims of a third party, you're not sure where you're going to stand. You're not sure if they're going to take it from you.
Francis Hunt, also known as Market Sniper, points out that a significant revaluation of America's gold reserves could instantly boost the federal balance sheet by recognizing hundreds of billions in previously hidden assets, thereby improving the debt-to-asset ratio and bolstering confidence in U.S. bonds and the dollar. By providing extra backing for government obligations, it could help address record-high sovereign debt, while reinforcing gold's role as an inflation hedge, signaling limits to currency debasement and strengthening trust in U.S. monetary stability. Despite its potential benefits, gold revaluation would likely trigger significant market disruptions. Financial markets have operated for decades under the assumption of fiat currency dominance, and an essential shift in monetary policy could lead to substantial volatility across asset classes. Revaluation might paradoxically create inflationary pressures if implemented too quickly or without careful communication. The sudden recognition of additional national wealth could alter inflation expectations and lead to accelerated price increases in the short term. Major gold holders, such as China and Russia, who have both been actively increasing their reserves, would likely react with deliberate actions to capitalize on a more gold-driven monetary environment if the U.S. were to revalue gold. A comprehensive legal and regulatory foundation would be required for such a change, including congressional consent, coordinated action by the Federal Reserve and Treasury, and a clear implementation strategy. The foundation for this strategy may already be in place, according to recent Treasury remarks on asset monetization. Growing awareness among financial professionals and officials highlights gold's potential as a significant instrument for addressing America's debt issues, although the timing and scope of any adjustment remain unknown.
What does history show us on revaluation conduct? It shows us that government has no interest in making its citizens wealthy. What did they do previously? Roosevelt got everyone out of the metals by decree, by threat of law, massive fines that would run into millions today. It was tens of thousands back then when you bought houses for that kind of money, and multiple years in jail. What did the events of COVID tell you about their approach? They're in it to enrich themselves. You weren't given the heads up of something coming, then everyone's speculating and all jumping into pharma shares. They took the money and they closed your businesses down. What do the possibilities of the great taking tell you? The possibilities of the legalese versus the English show. When you understand where they're seeking to take us, and this is my conspiratorial nature, Clive might think, but we are looking at a global communism and totalitarianism to make everybody reliant on UBI, as large a segment of the population as possible, so that you ultimately control them. If you control the food supply and you control how they earn and what they can eat, you have the end goal that I believe these people have always sought. So the lottery hope of a 4x, 5x, 6x on gold that will benefit quite a reasonable sway. Now, as we say, hedge funds don't really have a lot of gold, but there is still in the liberty movement quite a high tendency to stack gold and silver, that they're greatest enemies. And believe you me, libertarian people who seek self-reliance are invariably the biggest enemies of a totalitarian state who's seeking a great leveling in the Western markets. You are not likely to get this lottery ticket. And I don't want to be the guy behind hopium on this for a number of reasons. However, truth does out, and I think the option of a mark to market is far more likely, and the force of necessity and the inflation that they're going to be generating could see Nixon-esque regular mark to markets to open up the overdraft out of force of necessity, which probably means they'll go either for a similar confiscation or other aspect, which is a bit draconian, but depends how totalitarian we get. We're being told a lot what to do, but they can also do their unrealized capital gains, which is what probably my primary scenario, where they can enforce sales by instituting an unrealized capital gain on you. So they want to know what you have, so you're going to have to blockchain it. I would suggest maybe having some gray or black gold, which would be off-grid, illegal, and probably punishable by death, given that they're the Marxists that they are. And you probably will face capital gains tax even if you have not sold, just by virtue as they know we're patient stackers. That's how they have a plan for gold and silver, guys. Without a doubt. And they aren't going to enrich us without a clawback or an attack vector. And it's not good news for me to say that. Don't shoot the messenger. I'm just very clear about what history tells us about the kind of people we're dealing with. They do the revals after they've stripped you out. And if they're not going to be able to get away with doing that now, they're going to make sure they get their pound of flesh out of you, the Shylocks that they are. So that's my take for the question. We've got to watch for those attack vectors if they do end up giving you a decreed new price that isn't price discovery. There's a lot of legalese that will have to be negotiated. I don't believe they'll be prepared to bankrupt the banks, their shareholders. And I don't think it's a high probability, and don't get sold on hope, because then you don't get the crash of the disappointment. Mark to market is far more feasible. And I think it could regularly be mark to market, because once they do it once, it becomes the tap that they keep dribbling the drops out of and getting sustenance. So it could be repeat. And I think you should keep doubling down and keep giving them back their fiat and keep stacking. And you should have locality optionality so that you don't get taxed out of your metals. And that's what we do for our community very specifically, because it's not just what you make, it's what you get to keep.
A revaluation of US gold might reveal enormous latent value in the country's reserves, enhancing fiscal stability, fortifying the dollar, and indicating a cap on unrestrained currency production. To prevent market turbulence or inflation shocks, such a move would necessitate rigorous coordination between the Federal Reserve and Treasury, a precise legal foundation, and a well-managed communication strategy. The ramifications would be seen globally, changing monetary policy, and potentially hastening the transition to a financial system that is more heavily reliant on gold, with big gold-holding countries like China and Russia ready to react strategically. What short-term effects may a gold revaluation have on international financial markets? What legal and practical measures would the United States need to take to carry out such a revaluation? Please leave a comment below with your comments on Clive and Francis's gold revaluation analysis. If you find this video helpful, please give us a like and turn on notifications to stay up to date with our latest videos. I'll see you in the following video. Thank you for viewing.
Gold is becoming more expensive. It is the dollar which is losing its purchasing power versus gold. The price has been steadily moving upward over the last 2 years. And it breaks out, it surges 15%, it consolidates for another 3-4 months, breaks out, surges 15, 20%, consolidates for 3 or 4 months. This has happened 3 or 4 times now. And as most people know, it's been consolidated under 3,500 since about April or May. It's now broken out, and I think there's a rush of speculative interest because another 15%, if we keep the pattern going, takes us up to about $4,000 an ounce. I think the next move is, in this current move, is probably to 43.5, 44. If I'm right about all this yield curve control, cutting of rates, all that jazz, I think next year is when you get to 50, or at least you finally break through.
Gold's rise isn't about it becoming more expensive. It's the dollar steadily losing value against it. For the past 2 years, gold has followed a pattern of breaking out, surging 15 to 20%, then consolidating for a few months before repeating the cycle. After holding under $3,500 since spring, it has now broken higher, and if the trend continues, the next leg could carry it toward $4,000 an ounce. Silver, meanwhile, looks set for a move toward $43 to $44 in the near term, and with expected rate cuts and yield curve control ahead, next year could be when it finally breaks through the long-standing $50 barrier. Craig Hemke is a longtime precious metals analyst and founder of the website TF Metals Report. He recalls that back in 2011, silver's sharp run from $38 to $48 in just 4 weeks wasn't a bubble, but the result of a commercial short squeeze. Speculators were long while commercials were heavily short, and when shorts had to cover, prices exploded. If commercials pile on new shorts, silver will likely grind higher in a slow, stair-step move. But if they start covering without heavy speculative buying yet, that could trigger a breakout, drawing in new money and creating a powerful rally. Silver tends to sit quietly for long stretches, but once momentum builds, FOMO quickly takes hold. The current move may aim for $43 to $44 before pulling back, but next year, with rate cuts and yield curve control likely, it could be the time silver finally smashes through $50. If it does, tests that level as support, and holds above it, then the market could truly take off. If silver breaks above $50, the real stress will likely show in London's physical market, not comics. With supply deficits, limited float, and heavy reliance on paper ETF instead of real bullion, a surge in demand could expose shortages and trigger major volatility. That's when silver could truly get spicy. As we play Craig Hemp's video, kindly click the like button, subscribe to our channel, and enable the notification bell to receive fast alerts whenever we post a new video. I appreciate your support. Have fun watching the video.
Crazy breakout camp just yet. I think it's an important time for people to be paying attention to what's going on internally with silver. In April of 2011, okay, so most people remember that, price went from 38 to 48 in about 4 weeks of that month, over the course of the month. And it was assumed, it was written up, and people look back, with revisionist history and make it sound like it was a big speculative bubble. What was actually going on, if you followed the Commitment of Traders report back then, was a commercial short squeeze. They had all these speculators that are long, all these commercials that are short, and they started having to cover shorts for, without going into all the details as to who was short and why and all that stuff. But you could just see it on the Commitment of Traders reports. And that's what took it from 38 to 48. I think, could we have a similar month now? Of course. But we want to be watching those Commitment of Traders reports because it'll tell you a lot. If the commercial side of that equation is aggressively adding new shorts this month, okay, well, we're just in that kind of stair-step phase, of 2 steps forward and 1 step back. But if we start seeing a lot of commercial short covering without a lot of new speculative money yet, and that's what drives us, well, then, when we get that breakout of, top of the cup, then you get this big rush of speculative money that just catapults you further. Because silver's a lot like, and I'm sure I've used this metaphor before, it's like Newton's law of inertia or motion or whatever it is. I took physics, but it was a long time ago. An object at rest remains at rest until a force is applied to it, right? Just sit there. My computer right here, but if I push it, Okay. All right. It'll remain at rest until it, and that's kind of what silver's like. Silver just sit there, as we all know, and just do jack for a long period of time, even like not keeping up with gold because people are waiting. They're like, well, I'm not going to get involved in silver yet because it's just sitting there doing nothing. But then as it starts to get moving, then you get this kind of FOMO thing. Hey, we've seen this before. And so what will probably happen, I would not expect it to smash through the $48 to $50 all-time highs in the first try. That's generally not how it works. And so I wouldn't think we would get there this year. You go up, we could go to, I think the next move is, in this current move, is probably to 43 and a half, 44, given the channel that we've been tracking higher. Pull back, maybe under certain conditions, we make another run later this year. I think it's in next year. If I'm right about all this yield curve control, cutting of rates, all that jazz, I think next year is when you get to 50, or at least you finally break through. You go up, tap it, find resistance, finally break through. Everybody goes crazy, and then it pulls back, tests that old resistance level for support. And if it finds the support and you stay above 50, and then start making new highs after that, well then, holy Toledo, then we could have some fun. And all this stuff we've talked about all these years, Elijah, about how much silver is there really in the world? The supply deficit over the last 4 years. How much free float is there in London? How many ounces are levered? How many times supporting the derivative markets? All that stuff. If we set off on this, break through 50 and everybody starts getting excited and the banks don't want to fool around with it anymore because they don't have it, they don't want to deliver theirs out or whatever, things could really get spicy next year. I saw that stuff too last week. There were 9,000, I can't remember, 9,900 or something COMEX September silver contracts that were open and standing for delivery when that contract went off the board. And then it gets delivered against, you got to be 100% margin long covered so that you can take delivery if that, you're long and somebody that's short puts the silver to you. And, historically, that's a lot. But back in March and May, we were doing 18,000 contracts. Okay, so it's not like, oh, wow, it's 10,000 in September, the system. No, it's not. No. Not yet, at least, okay? But it is a not insignificant amount. If we've already delivered almost all of those, that's 50 million ounces. I don't know if it ever actually leaves the COMEX or if it's still just this, oh, this month I'll take delivery, next month you take delivery stuff. So we'll keep an eye on that. I don't think that's where the stress is. To me, after kind of getting excited about that 15 years ago, I don't think that it's the COMEX where you'll see delivery stress. It's more likely in London. I'll give you this. I mean, you've seen over the years, Elijah, and I'm sure everybody listening has seen this, we're like Stan Druckenmiller or Ray Dalio or, whomever, some big hedge fund manager. They'll say, we want to own gold. And you're like, good. And then they buy the GLD, right? And you're like, well, what good is that? I mean, that gives you price exposure, but you don't really, you can't take delivery, Stan. You can't take delivery.
Craig Hemke explains that the dollar index is misleading, as it only compares the dollar to other weakening fiat currencies. While it appears stable, all major currencies are losing purchasing power together. Recently, talk of yield curve control has quickly gone mainstream, signaling that central banks may soon cap long-term rates to contain debt costs. The U.S. looks set to follow this path, echoing past strategies to manage high debt. If that happens, it would echo what the U.S. did after World War II, when debt-to-GDP ratios were similar. Back then, the Fed and Treasury worked together to hold rates down, effectively inflating away the debt with cheaper dollars in the future. We could see something similar soon, especially if Fed leadership changes. This would likely require massive new quantitative easing, with central banks buying and monetizing their own debt in a move resembling modern monetary theory. Such a shift would push real interest rates deep into negative territory, and that's extraordinarily bullish for gold and other precious metals as fiat currencies are steadily devalued.
The deception of the dollar index because it just compares the US dollar versus all this other equally worthless fiat, right? And so the dollar over time, you pull up a 30-year price chart of the dollar index, and it's, it's 100 and it goes up to 120 and down to 80, and it just stays basically the same. Well, that's because all the other fiat currencies are devaluing at the same rate. But I said, expect more rate cuts than what people are thinking are coming. And furthermore, don't be surprised if by December, the December FOMC meeting, the Fed isn't openly talking about yield curve control. And I mean, I wrote that like on New Year's Eve last year. There were nobody talking about yield curve control. But now, all of a sudden, here in late August, early September, it's like, oh yeah, yield curve control is coming, like everybody was predicting this 8 months ago. Yield curve control is coming. Whether it's globally, if all these central banks have to do that to control the long end of their curve, right, and control their interest costs. But I think you're definitely being told and warned that it's coming here in the US. And I think that's all part of what's driving gold too, because that would be extremely bullish news for gold. You'd be holding real interest rates sharply negative. I mean, the US has done this before, which is why I wrote about it in my pod. I even put a link in there in that macrocast, because coming out of World War II, when we had similar debt to GDP ratios, that's what they did. They kind of combined the Fed and the Treasury together. They did yield curve control, essentially to pay off the debts of yesterday with the cheaper money of tomorrow, right? Get it under control, grow your way out of it, which is what Bessent keeps talking about now. Well, anyway, if you want to take the time, to connect the dots, I mean, I think they're telling you that's what's coming as soon as next year, once Powell gets replaced and everything else. And so if that's the case, they're going to be trying to cap the long end. It's going to involve a lot of new quantitative easing measures, central banks buying their own debt, monetizing, almost like a modern monetary theory move. Again, all of this is extraordinarily bullish for the precious metals in terms of devaluing the existing fiat currency.
Both gold and silver are flashing signals of major shifts ahead, fueled by monetary policy, debt dynamics, and the growing disconnect between paper markets and physical supply. If central banks resort to yield curve control and deeper monetary easing, precious metals could enter a new era of explosive gains, marking a turning point for investors who have been patiently watching these markets build momentum. Do you think central banks will be forced into yield curve control sooner rather than later? If silver finally breaks above $50, will physical shortages in London expose the true limits of supply? Leave a comment below with your opinions. We would be delighted to hear from you. Please remember to subscribe for more material, and give this video a thumbs up if you found it useful. We appreciate you joining us on this adventure.